Hi, welcome back to Trading Hour. Let's shift our focus now to the commodity space. Manisha joins in, and today the focus is on metals. Hi, Manisha.
Samara, thank you so much for that. Well, there are two or three trends that are emerging into the space right now. One, we had already factored in a 75 basis point rate hike from US Fed, and is the reason you saw a lot of selling ahead of the actual event itself. So there is a bit of a relief rally actually that we are seeing in the industrial metals there. For gold prices, we've been trading within that range, 1650 on the lower side to 1675 on the higher side. And this is a 29-month lows, by the way, for the gold prices there. We have seen gold come off those highs of 2050 in the month of March to 1650 right now. So it has been a $400 of a decline as well because of the kind of rate hikes that we have seen and the strength in US dollar index as well, which is trading at a 20-year highs. The reason that the gold prices also are holding is because we have had the Russian president saying that they're increasing troops in Ukraine, and there is a bit of a sentiment premium coming in from that conflict yet again is the reason you have seen the prices hold around here. Same is the case with silver as well. We have seen prices decline by nearly 2% since the event yesterday. There is also a Citi report which says that the technical support now for gold stands at 1650, and if that level breaks, then 1600 on the lower side is also a possibility. But Citi also goes on to say that they are bullish in case of gold by the end of next year and from 2024 as well. For the base metal prices as well, we have seen some decline, but the reason you have seen gains come in for the Indian markets is because the Indian rupee has depreciated by nearly 50 to 60 paisa, and that is what is cushioning this decline that we are looking at in the international markets. Also, while the event has passed, but the US Fed clearly is way more hawkish going forward, and that is what could pressurize the global economic growth. We already have seen China continue to decline. There is an expectation of stimulus. All the industrial data that we have seen come in from China and various other countries has been on the weaker side. The Chinese real estate numbers have been on the weaker side as well, and that would continue to weigh on. The US home sales number data that came in yesterday also has seen a decline for a 7th straight month in the month of August. So there's a lot of numbers that could actually continue to weigh in case of metal prices. There also was a statement from Rio Tinto late last night saying that copper is set for a short-term weakness. They are looking at inflation concerns and supply chains issue as well. But Rio Tinto also says that as we move forward by 2025, excuse me, you would be looking at higher demand and lesser supply, and that would support copper prices, so much so that we could be looking at prices doubling. But for the near term, the pressure just may about continue. And not just about copper. If you look at aluminum, that's trading at a 17-month lows. Zinc prices are trading at a 2-month lows. You have iron ore prices, which are now trading at a 9-month lows as well. We have seen $100 per ton break here as well. The Chinese contagion in sense of property markets now seems to be spreading to state-backed developers as well. And when you look at the real estate, I'm so sorry for that. When you look at the property investment in the month of August, that has continued to decline too. So all the numbers that we're looking at are still on the weaker side. So metals as a sector, I mean, the kind of relief rally that we are seeing right now perhaps could get sold into. This is what the metal prices have done on a month-on-month basis. Very far and few on where you can see perhaps a positive there. But copper, iron ore, gold, all of that trading in the negative. And that's exactly the scene that we have seen come in for zinc, aluminum and iron ore as well. Nickel, the reason that you have seen a rise onto that one is because of the Russia concerns. 10% of global nickel comes in from Russia, and there are concerns sourcing it is the only reason that one is trading in positive.
All right, Manisha, thanks a lot for getting us that entire wrap on what's going on with the metal prices. With that, we're going to get into a short break. The market, by the way, is slipping once again. We're pretty much at the low point of the day. From the top of the session, we're down around 120 points. So it is a 130-point cut that we're seeing on the Nifty right now. The mid-cap index also at the low point of the day. The banks is the main sector which is underperforming today, and some of the big auto names which are holding up, the likes of Bajaj, Tata Motors, have also slipped over the past 20 minutes. So let's quickly get into a short break now. But when we come back, we'll discuss the market technicals. Himanshu Gupta of Globe Capital will be with us.